Hi, thanks so much for joining in. You're watching Beaky Prime. My name is Alex Mathew. Now, not a market that we speak about very often. I say this every time I speak to my next guest, but it's something that you should bear in mind very closely because it has implications for risk assets, and here I mean equity. We're going to talk about everything that you need to know about the current trends in the fixed income space. And joining me to talk about it, I have Lakshmi Iyer, who is the Chief Executive Officer, Investment and Strategy at Kotak Alternate Asset Managers. Thanks so much, Lakshmi, for taking the time. We're speaking on at a time when we're just ahead of an important monetary policy decision by the Fed. We've just heard from the Bank of Japan. What do you make of the latest developments?
So a couple of things are happening. The pace at which we've seen the bond yields move in the US, it reminds me of the movie Fast and Furious. So furious are the investors, and obviously fast has been the bond yield movements. And given what's happening on the geopolitical front, it only makes sense that the Fed goes in for a pause. So if you look at the Fed fund futures, which is an indication of what is likely to happen as a Fed outcome, that also seems to be suggesting a very similar outcome. So I think it should be a pause for now. Pause doesn't mean that there will be no more rate hikes, but it's going to be more of a wait and watch mode as of now.
What about what the Bank of Japan did? Was that along expected lines? I've heard it being described as a tweak rather than a major change.
So, yield caps, they try to cap the level at which the yields want to go or they have to go because Japan has come out of a so-called deflationary spiral after a very, very long time. And if interest rates start rising relentlessly, it tends to sap consumer demand. So I think, and that's not true just for Japan, but almost every part of the world. So I think all that is kind of tying into the kind of outcomes that the central bankers are announcing.
Okay. The reason I asked specifically about Japan is that in the past, I believe, if I'm not mistaken, last year, when we saw yield spike suddenly in Japan, you saw that kind of play out across the rest of the world where you saw yields going up very, very sharply. Are you anticipating something like that?
Well, if you ask us right now, it looks like bond yields in the US, for example, at around 5% seems to have peaked out. It's going to be, another thing you need to note is that there's a lot of supply, the primary supply auction as we call in the US, which is also denting the demand. And the demand levers, if you look at China, they have net sold US treasuries. If you look at Japan, they have net sold US treasuries. So where is the demand lever? So in intrinsic demand and supply mismatch is also what we are seeing right now. So I think looks like and now the markets are kind of stabilizing. So we're not really expecting a major rout in global yields, maybe 10-15 basis points, but the kind of 1.5% uptick, I think we are done with that for now.
Then would that challenge the thought that at 5% or close to 4.9% for the 10-year and elevated yields, shall we say, in the US, that there aren't a lot of buyers of US debt? Because the reason we're asking, or reason I'm asking, is because I've been asking CIOs all day today about whether or not things are moving from risk assets, away from risk assets and into debt.
Now you will start seeing buyers because it's always a risk reward kind of a trade-off. At 5%, yields look too salivating. So if you ask me, would you love to buy US treasuries at the current level and hold it on for the next couple of years, hoping for some capital gains? I would say, why not?
Because you anticipate that in that interim, there will be a change.
That's correct.
But have you pushed your own expectations of a downtick in the US economy or downturn in the US economy further? Have you pushed it beyond? Of course, everyone has. But are you pushing it now to beyond the first half of 2024?
See, it's a mixed bag right now. Data is giving you very, very mixed signals. Housing data is one story. Consumer data is another story. But I think for now, the same narrative that higher for longer, without touching benchmark rates, I think that is going to be the way forward because there are these evolving situations which are sometimes beyond the US also, which is the geopolitical in this particular case. So I think too many sum of moving parts right now. So you have to do the multiple ball juggling act, or as I would say, the Rajnikant act of Tollywood.
Yeah, it's been said very vociferously by the RBI governor that monetary policy in India is only determined by domestic factors. But would you entirely agree with that, or would you say that we can't be isolated in a world where, if you're saying that interest rates higher for longer, we're going to see interest rates higher for longer in India as well?
Psychological impact will be there if the US, we are domestically way more resilient. So that is something which a central banker cannot ignore. But at the same time, at a time when US is not going to ease rates or still has not said that it's not going to hike rates, India may not be in a position to cut rates. So I think that psychological impact will be there for sure. But truly our factors, our growth factors, everything is pointing to way better resilience.
Okay, last question in terms of strategy. And, again, I will go back to how I introduced this. We don't talk about this enough, but then there is a significant benefit to having a conversation on fixed income strategy. Yeah. Where would you put your money right now on the yield curve spectrum right now? Where are you seeing the most value?
So I would love to create a portfolio with a 4.5 to 5 year centric sort of a duration, because the yield curve is flat. So it does make a lot of sense. And if you have the wherewithal to deploy money outside of India, you must go long the US treasuries. That's right.
Fantastic. Thank you so much, Lakshmi, as always, for speaking to us. Viewers, there you have it. Strategy on fixed income as well for you to think about. Do stay tuned. Lots more coming up on BQ Prime.